Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. For Elliott Wave Trading, our website is www.24elliottwaves.com. Alright, the title of the video is Elliott Wave Explained. Step 3. Elliott Wave Explained, Step 3. In this video, we want to talk about the ending diagonals. All right. We have also what we call the leading diagonal. But in this video, we will talk about what we call the ending diagonal. As the word is self-explanatory, all right. The ending diagonal is taking place in the fifth Elliott wave, all right? The leading diagonal will take place in the first Elliott wave because the first Elliott wave is the leading wave, all right? The ending wave is the fifth Elliott wave. So when we are talking about the ending diagonal, we want to know when and where the ending diagonal will take place. It will take place in the fifth Elliott wave. All right? Now, this is about where does the ending diagonal takes place. All right? The next question is when does the ending diagonal take place? All right? Moment, please. 1 second, please. The ending diagonals takes place when a financial instrument moves too far, too fast. All right. So if we are asked the question, when does an ending diagonals takes place? All right. The ending diagonal takes place. All right. When a financial instrument moves too far and too fast. There are two conditions. The financial instrument must move too far, okay? Price going too far, all right? Extended move, all right? And also the speed of the price, okay, must be high. A high speed move that propels the price too far. All right, so the ending diagonal will take place if the first, second wave, third wave, and the fourth wave, okay, have propelled the financial instrument too far and also too fast. All right, far, F-A-R, fast, F-A-S. So there are two conditions. So when we are asked the first question, where does the ending diagonal take place? The correct answer, the ending diagonal will take place in the fifth Elliott wave. The second question, when does an ending diagonal take place? The ending diagonals will take place when a financial instrument during the first wave up to the end of the fourth wave, the price moves too far and too fast. So we can know whether we're going to have an ending diagonal if the financial instrument, okay, moves too far and too fast. The first thing I want you to understand, talking about Elliott wave explain, the word that we are using, too far, F-A-R, the first thing that should come into your mind is that the financial instrument, it is in the overbought zone, is considered as overbought. The move has been extended for too long and the price is now in the overbought zone. Or the financial instrument, okay, is more than 5 times, okay, the net profit, okay, talking about fundamental analysis, okay. So if a financial instrument, okay, goes up more than 5 times the net profit, all right, the previous net profit, all right, we may say that the financial instrument is overbought, talking about fundamental analysis. But technically speaking, when we are seeing the financial instrument, moves too far, the first thing that should come into our mind is that it is in overbought zone. We can use a Fibonacci extension, which means the financial instrument may be in a zone of 314 Fibonacci extension zones, or 361.8% Fibonacci extension zone. But this is not an exact science. But the first thing that we want to check, has the trend going now for too long? So we will see how long the trend has been going up and how far, talking about, the current price, so the current price at the end of the fourth wave compared to the price at the beginning of the first wave. So if a financial instrument move, for instance, from $7 and then move all the way to $60, at the end of the fourth wave, that's a quite significant price move, all right? That's a move too far, all right? I hope you understand that. The next question, we will check too fast. What's the meaning of too fast? When we are talking about fast, we are talking about the speed of the price. How do we check the speed of the price? We will check the volatility. Another thing that I've said to traders, we will notice very often if a financial instrument is moving too fast, you will see that the price will go in vertical move. The normal progression of the price is a diagonal move. All right, talking about proprietary trading tool, diagonal move, retracement to the opposite diagonal. The normal progression of the price is diagonal. The price move up, you see, it move up nicely like this in diagonal, like this. This is what I call diagonal. But if the price is moving too fast, sometimes you will see that you just go straight line like this, almost vertical. That's how we will know that the price is going too fast. Another thing that we can check also is the size of the candlestick bar and the volatile candlestick bar. That will signal to us that the price is moving too fast. So pay attention carefully. You see this candle here is quite a long candle. This is a volatile candlestick bar compared to this candlestick bar here. This is a low volatility candlestick bar. So to know that a financial instrument is moving too fast, we can check the size of the candlestick bar. This is very important for us. We can also check the direction of the price. Is it going vertical? Is it going more than a diagonal move? So if it's something like this, it's not perfectly diagonal. This is not perfectly diagonal, but it's still diagonal, but it's not perfect. You see, but if it's like this is a normal diagonal move when the price is going gently up. But sometimes the price will go like this. This is quite a high speed price move. So now we understand where the ending diagonal will take place and when the ending diagonal will take place. So by understanding these things, we can use the area waves more accurately. This video is about area wave explains. Step 3, we are discussing the ending diagonal that will take place in the fifth wave. So where the ending diagonal will take place, the ending diagonal will take place is in the fifth Elliott wave when after, so talking about the first wave, second wave, third wave, and the fourth wave, that move from the beginning of the first wave up to the end of the fourth wave. Is it fast? Does the financial instrument went too far? All right. If yes, there is a high chance that the fifth Elliott wave, there is a high chance that the fifth Elliott wave will be an ending diagonal. Now, before we continue, I would like to say to traders that the area wave traders is a guidelines that we follow to forecast the next price move. Is not an exact science. The reason why I say this all the time is because all traders do not have the same mindset. All right, so I need to clarify this. So when we are saying this, so we analyze this, we will not assume that the fifth Elliott wave will be definitely an ending diagonal, but we are aware that there is a high chance, talking about probability, that it can be, is likely to be, it is possible that, after observing the move from the first wave to the end of the fourth wave, there is a high chance that the fifth wave will be an ending diagonal. What is the correct approach at this point in time, all right? So the correct approach is just wait and see whether we are having an ending diagonal, which brings us now to the internal waves of the ending diagonal. So now we know where the ending diagonal will take place and when it will take place. Now we're going to look at the anatomy of the ending diagonal. When we are talking about the anatomy of the ending diagonal, we are talking about the internal waves of the ending diagonal. There are two types of ending diagonal. One is happening in a downtrend when the price moves too far, too fast in a downtrend, followed by an ending diagonal. There is another ending diagonal that can take place in an up move, uptrend, okay? So I want to show you here, okay, the first ending diagonal. This is the ending diagonal. You see this section here where there is a red line. You see this red line here. This is the ending diagonal after a downtrend, okay? I want to show you another ending diagonal. This is the ending that you see where it's the blue line from here all the way up here. This is the ending diagonal at the end of, an up move. All right, talking about the anatomy or the structure, okay, the price structure of an ending diagonal, the internal wave at free. It makes sense? No, it doesn't make sense. Okay, let me explain myself, okay? So we know, okay, you see here the fifth wave is extended. It formed the 5 waves. So the first minor wave from here, follow me carefully from here to here. That's the first minor wave of the ending diagonal, which is the 5th wave, okay? It's the second minor wave from here down to this point. It's the second minor wave of the ending diagonal, all right? Am I explaining this clearly to you, okay? From here to here, that's the third minor wave of the ending diagonal, okay? From here, where my cursor is now, to this point, so from here down to this point, this is the 4th minor wave of the ending diagonal. And then from here, where my cursor is, all the way up here, that's the 5th minor wave of the ending diagonal. That's why I'm explaining to you that the internal waves of the internal wave structure of the ending diagonal is free, okay? 5 free. So the first free is, you see the first minor waves from here to here. You see the free, 1, 2, 3. So that's the first free. The second minor wave of the ending diagonal is again free, 1, 2, 3, all right? The third minor wave of the ending diagonal is another free, 1, 2, 3, all right? The 4th minor wave of the ending diagonal is divided again into 3, okay, minor wave, 1, 2, 3. And the 5th minor wave of the ending diagonal is another free move, 1, 2, 3. The price confined in a triangle. This is very important. See here, it's a triangle. See here. So you will have a higher low or the base when we are talking about ending diagonal at the end of the uptrend. So you have higher lows and you see the high. No big difference between the high. See, no big difference between the high. And suddenly, at the end of the ending diagonal, what is likely to take place is that the price will correct itself. There will be a sharp correction. So this is the internal waves of the ending diagonal, talking about the anatomy of the ending diagonal. I hope I have explained this to you clearly because this is about Elliott wave and we want traders to understand clearly, okay, the wave theory and how they can use it in real time. It is one thing to know about Elliott wave, it's another thing to know how to use Elliott wave for day trading, for swing trading, and also for investment purposes. What we do care about is that traders understand this and use it in real time to make excellent trading and investment decisions. All right, we can go deeper than that. So this is the internal wave, or talking about anatomy of the ending diagonal. Free. We have higher lows, but you can see the difference between the high are not very clear. One thing I need to clarify with traders is that the ending diagonal, which is a 5th wave, is a bit a strange 5th wave. Why is it strange? It is strange because normally, all right, according to the wave principle, the first wave, the third wave, and the fifth wave are divided into 5 minor waves. But as you can see here, the first minor wave of the ending diagonal has been divided into 3 instead of 5, which is a strange thing, but there is a reason to it. I will explain it to you because I want you to understand this clearly, all right? You can see again the third minor wave of the ending diagonal is not divided into 5 minor waves, though it's an impulsive wave, all right? It has been divided into 3 again. And the fifth minor wave of the ending diagonal is not divided into 5 minor waves like a normal impulsive wave, but has been divided into 3. The corrective wave normally divided into 3, which is second wave, 1, 2, 3, normal. It's a normal second wave, a normal fourth wave. But you can see that the first minor wave, the third minor wave, and the fifth minor wave of the ending diagonal have also been divided into 3. That's why the internal wave or the price structure of the ending diagonal is 3, 3, 3, 3, and 3. I want you to see the next ending diagonal that we have at the end of a downtrend. All right? So this is the ending diagonal at the end of, a downtrend. So this is the normal first wave, second wave, third wave, fourth wave. So at the end of the fourth wave, we will analyze or we will assess whether the price went too far or and too fast. Too far and too fast. Not too far or too fast, but too far and too fast. Okay? If the price went down too far and too fast, all right, there is a high chance the fifth Elliott wave will be an ending diagonal. This one example here, as you can see, the internal wave or this ending diagonal in a downtrend is also 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, and 1, 2, 3. Again, very important point that I want you to understand. In the previous ending diagonal that we have at the end of the up move, we have higher lows, and then the difference between the high are not significant. But in the case of a downtrend, we have lower high, lower high, lower high. The price again is confined in a decline, is confined in a triangle. This is a very important thing that you need to understand, and this is why we are explaining it to you, all right? So lower high, lower high, lower high, lower high. The other one, higher low, higher low, higher low, okay? Don't forget that. And the price confined in a triangle. The structure of each minor wave is free, all right? So this is how we're going to know that, okay, it's formed. So you see 1, 2, 3, 4 waves. Price went too far, too fast. So you see now 1, 2, 3, and then again 1, 2, 3. At this point, you have this point and this point. You draw your trend line like this, okay? You draw it like this. And if you like, you can trade it. You can trade the internal wave of the ending diagonal. But if you don't want to trade it, you just wait patiently until the pattern, the Elliott wave pattern, which is the ending diagonal in this case, is completed. At the end of the ending diagonal, after a down move, there is a high chance that we may see a reversal. That's the gorgeousness or the beauty of the ending diagonal. All right? So, very important for traders to understand, where does the ending diagonal take place? We explained it already. When the ending diagonal take place, we explained it already, all right? What is the anatomy of the ending diagonal? We have already explained that also, all right? The wave structure. The formation of the ending diagonal is confined in a triangle. Very important. Now, the next question, what takes place at the end of the ending diagonal? There is a high chance that we may have a reversal. So here, bullish traders at the end of the ending diagonal, after analyzing the internal wave on the ending diagonal, when we draw a warning line here, Very important. We draw a warning line here, and we use what we call a top-down trading method or a multiple time frame trading method without violating the market pattern. So this will be what we call the trading setup. The next step, we will go to a higher time frame to validate, okay, this setup. Remember what I said to you before? A common trading mistake is to count Elliott wave on one single time frame. So, for instance, you see this pattern on a daily chart, you stop on the daily chart alone, and you go and trade it. It's a mistake. Go to the higher time frame, check the weekly chart, check the monthly chart, check the quarterly, check the yearly chart. This is about validating the setup. Without a valid trade setup, there is no winning trade. I don't want the video to be too long, so I'm going to move up again, and I'm going to go back again and, to the other pattern. What's happening here? Why we have a strange fifth Elliott wave? Why we have the first minor wave divided into three? Ladies and gentlemen, I want you to understand this clearly. This is about Elliott wave explained step 3. It's a quite advanced trading method, all right? So if it's too much for you, all right, go to 2-4 Elliott wave, click on the fifth wave extensions, all right? You understand more, all right? If you have any comment, put it below, and I will get back to you. If you want me to record another video relating to this matter to explain it more, put your comment below, and I'll be happy to record another video to explain, okay, the Elliott wave theory to you, okay? What is happening, my friend? In the mind of Elliott wave practitioner, okay, when a move is divided into 3, we think of correction or reversal. All right? The next thing that comes to the mind of Elliott wave trader when a move is free, we think also about, if we see, okay, 1, 2, 3, all right, a move up in an uptrend that is divided into 1, 2, 3, but it is in an uptrend. So you see we have an up move, and we have this 1, 2, 3. The next thing that comes into our mind is distribution. People are selling, hedge funds are selling, banks are selling, big financial institutions are selling. So when you see this 1, 2, 3, price stops, and again 1, 2, 3. Now this is normal because it's a corrective wave. Now we see again we are in an uptrend, and a move to the upside. We are in an uptrend, very important. And a move to the upside is divided into 3. Think of distribution. All right. It makes sense? So what is happening here? Because the financial instrument went too far and too fast, all right? The smart money knew that, okay, this financial instrument is overbought. Fundamental traders, serious investors don't want to buy it at that price. As the fifth wave is now underway, the late market participants are still buying, but the smart money is busy selling. What is happening here, you see this triangle here, these are sellers. In fact, if you have a trading volume on this chart, you may see that, okay, we are seeing a surge in trading volume as the price is rolling down. All right, but we are in an uptrend, and anytime the price is going down, the volume is high, it's alerting us that there are some people selling as the price going up. So in fact, the ending diagonal is a distribution pattern because the price went too far and too far. Too far is overbought. If it's truly overbought, now the confirmation is taking place. Okay, the indication is given to us, or the warning is given to us by this ending diagonal. It's a warning pattern. All right. So because a distribution is taking place, the first wave is not divided into 5 minor waves in normal condition. The third wave is not a strong third Elliott wave. Look at the difference between the first wave and the third minor wave of the fifth wave itself, and the fifth minor wave or the fifth wave. As the price was going up during the fifth wave or during the ending diagonal, a distribution is taking place. They are selling. That's why very often at the end of a bullish ending diagonal, we have a sharp correction, a reversal. The opposite is also true, my friend. Let's check how long I've been talking to you now. 24 minutes. Okay, we'll wrap it up soon. The opposite is also true in a downtrend. Price went too far and too fast from the first wave to the ending of the fourth wave. So we are paying attention to the low and when the price is going down. So talking about from the beginning of the first wave to the end of the fourth wave, this is the lowest low. So the price went too far and too fast. Okay? So there is a kind of a divergence talking about the fundamentals. The fundamentals are solid, the business is healthy, but for one reason, people sold the stock too far and too fast. The fundamental traders, the smart money, the big institutions are aware that this business is a sound business, but it is, in the proper sense of the word, oversold right here at the low of the third area, oversold. Now, as the ending diagonal being formed at the end of this downtrend, there is accumulation taking place. The opposite of distribution is accumulation. So in the up move, the ending diagonal is warning us about possible, sharp correction, alerting us that there is a distribution taking place. In a downtrend, this ending diagonal is warning us that there is an accumulation taking place. So as other traders are still selling here, all right, the smart money is busy buying. The price couldn't go down, so the first minor wave of the fifth wave is no more divided into 5 minor waves, but into 3 because an accumulation is taking place. Have I explained myself clear to you? Now, if you like this video, please be busy to share it with your friends, all right, so other traders may know about it. Why you should share this video? You should share this video because, why? When I start trading first, listen carefully, when I start trading first, traders always use a word that I dislike. The word is dump money, D-U-M-B, all right, dump money, voila, okay? A dump money is a dump money, D-U-M-P-E-D, dump money. A dump money is a dump money. Why? Today we're talking about that. And they say this is a dump money, a dump money. They were calling ordinary traders dump money. They were calling retail traders dump money. And in fact, I was losing like a mad dog, all right? So I was in a group of the dump money because as the professional are ready to buy, I am busy selling. They kick me out. I am the dump money, all right? Dump money is a dump money, all right? Okay? All right? On the other hand, when the professional are busy, all right, to buy, I'm busy selling, all right? I am the dump money. So the ending diagonal, remember what I said to you, you must share this video. The dump money, the ending diagonal reveal to us the dump money. Traders that are selling here, if they don't understand what is taking place here, okay, they are the dump money. The dump money is a dump money, all right? So here is alerting us that the accumulation taking place. I know that I need to explain to you, my friend, because you are my friend, all right? I want you to understand this once and for all. That's why I spend this time to explain everything to you about the Elliott wave theory, step 1, step 2, this step 3. This more advanced Elliott wave trading. I know that thing I need to explain to you, my friend. Pay attention, all right? Pay attention carefully. You see, the price is, whenever you see a triangle is always a warning. Do not forget that. Whenever you see a triangle, it's giving us a warning, all right? A warning. But this triangle, all right, is so important that you cannot afford to ignore it, all right? You cannot afford to ignore it. Usually, I'm speaking to the investors now, okay? Somebody, for instance, buys stock, okay? All right, buy stock, and stock going down, people think that it's oversold. So it becomes cheaper, so people buy more, okay? So now, stock going down more, people say, okay, it's going to go back up again, and people buy more, okay? Because they expect the financial instrument to go back up. But very often, when the ending diagram is taking place, traders or investors that were patient start losing their patience. So they bought more here, and then start going down here, they give up. They say, I can't take this anymore. And then they sell at loss. Very often, right here, people will sell at loss. Say, I can't take this stock anymore. It went down too far. I give it a chance. I bought it when it went low. I bought it again. Now it went down again big time. And now I'm going to sell it, sell everything. And they sell and go. And the next day, they check in the newspaper, they check on the web, and here the stock is going up big time, because after the ending diagonal, we have a sharp move to the upside. The price will run very fast because it is purely oversold, and the Elliott wave practitioners know about this. The smart money, the hedge fund that were accumulating during the ending diagonal at the end of a downtrend know that. So some investors who give up right here are the dump money because they don't understand anything about Elliott wave, or they call Elliott wave mambo jumbo. One thing that I do not advise traders to do is to discount, okay, the tool that other traders are using. Okay, do not discount the tool that any traders are using, and do not be arrogant either. Okay, in an up move, here we have what? A distribution taking place. In the ending diagonal, in an up move, we have a distribution taking place. All right? A distribution. So they are selling. So people are buying before, up to the end of the fourth wave. So stock going up nicely. Okay? So each time the stock pull back, people buy, stock goes up. It pull back, people buy here, it went up. Okay? And then you pull back again here, people buy, and the price went up. And they pull back again here, people buy again. What usually take place in the ending diagonal when we had up move, the euphoria. Have you ever heard that word? Euphoria. When the bullish traders think that they are invincible, nothing can happen to them, and people will buy here and hold. This is a dump money. Do not buy and hold, okay, during an ending diagonal in an up move. It's a dump money. It's a dump money. D-U-M-B, D-U-M-P, dump, dump, and dump, okay? So you don't want to buy and hold, you want to buy any stock, you see the ending diagonal in an up move, don't buy anything. Why? Because the price is going to fall down big time. It makes sense? Let's continue with this explanation about the Elliott wave theory. It's a little bit advanced, okay, Elliott wave trading, but I want you to understand it so you do not make these, okay, costly mistakes. Elliott wave explained in part 3. So I explained to you, okay, already, all right, where the ending diagonal will take place, when the ending diagonal will take place, the anatomy of the ending diagonal, what is taking place in the ending diagonal in an up move, distribution, what is taking place in an ending diagonal in a down move is accumulation, all right? The opposite of accumulation is distribution. When distribution is taking place, people are selling gently over time, all right? When accumulation is taking place, people are buying gently, chamber over time, all right? Still the price going down, people are busy buying, all right? This is what we call accumulation. And also I explained to you that, reversal, you are looking for a reversal pattern. The ending diagonal is a very powerful, reversal pattern. Also, we clarify everything that one needs to know about the ending diagonal. So, we know that if the financial instrument moves too far, first thing coming to our mind, overboard, and too fast, the speed, there's a high chance that the fifth wave is likely to be, an ending diagonal. One should not use, the Elliott wave theory as a science, but one should use it as a guide, to make excellent trading and investment decisions. I have one more example that I would like to share with you, all right? But I will not discuss that in this video. I will invite you to follow me in the next video when we will be talking about the Elliott wave explained, step 4. I will be talking about the ending diagonal, but I want to show you just one specific aspect of the ending diagonal, a bit confusing, a bit strange ending diagonal compared to everything else that I've said in this video. My friend, if you like this video, okay, give us the thumbs up. If you dislike this video, please make sure you give us the thumbs down, all right? But put a comment below why you disagree with us, all right? Am I too loud? Have I said too many? Okay, all right, something. Say something, okay? Say something, all right? Now, if you say, George, you make my day, you are my best friend, feel free to share this on Google+, on Twitter, on Facebook. And if you have a website, you can even embed this video. I would like to invite you now, if you like this video, to subscribe to our channel, for Elliott Wave channel. There are many free, okay, Elliott Wave, okay, videos, and you can learn to improve your wave analysis. We are the TSTW24 traders talking about Elliott Wave Explained, Step 3. I would like to thank you for watching this video, and until the next time, enjoy yourself and be very happy. We are the TSTW24 traders. Speak to you soon.